Hello, my name is Amine Mansouri, and this analysis aims at demonstrating why LVMH will outperform Burberry Group. LVMH and Burberry Group are respectively France-based and UK-based luxury goods companies. Selective retailing, fashion and leather goods account for two-thirds of LVMH sales, while retail and wholesale constitute almost all of Burberry Group's. 62% of LVMH revenues are generated in Europe and Asia, which is 10% lower than Burberry Group. The two companies are trading at low PE and price-to-book ratios while offering an attractive dividend yield, meaning that both are cheaper than their peers. From the comparison of the value-cost ratio to the wealth-generating power, we can infer that since LVMH and Burberry Group lie below the trend line, both are undervalued. LVMH and Burberry Group have been earning returns above the discount rate, meaning that management have done a good job at creating economic wealth. Yet, even if LVMH CFROI has been slightly fading over the years, it has been less volatile than Burberry Group's, which has been more impacted by corporate life cycle. This implies higher CFROI forecast for LVMH than for Burberry Group. Assets have been growing faster for Burberry Group than for LVMH, which is already very large and a more mature company. Burberry Group stock performance is strongly correlated to CFROI. Indeed, since 2012, returns have been going down, while assets kept growing, leading to decreasing shareholder value. On the contrary, and despite its fading CFROI, LVMH has been increasingly attractive to investors. Sales have grown in almost every year for both companies over the last decade. However, in 2015, sales decreased slightly for Burberry Group, whereas they rose by 16.4% for LVMH. While LVMH margins have been relatively stable since 2007, Burberry's margins are on a declining trend after they reached historical peak in 2012. Similarly, despite high levels in the late 90s, Burberry's asset turns have been declining steadily. However, LVMH has maintained them at around 0.7 for more than 5 years now, which is above the latest Burberry Group's asset turns level. In 2015, the challenging global environment has significantly impacted the luxury industry. Yet, LVMH, thanks to its diversification strategy and a strong innovation policy, remained robust throughout the year. As UK voted to leave the EU, Burberry Group would be more exposed to critical consequences in increasingly volatile markets. With Brexit, Burberry Group's returns and asset growth will not be as high as they were in the last few years. Conversely, even when assuming fading CFROI and asset growth for LVMH, the French-based firm still has a good margin of safety. In spite of its market leader position, its impressive external growth strategy, and its strong track record of generating economic wealth, LVMH remains cheaper than most of its peers and appears to be a sound investment as it offers a potential upside of 48%. Thank you for watching.